How's it going, everyone? This is Brian Hoops here with Midwest Market Solutions. This is our latest internet video series. It's Wednesday, January the 13th, and we try and have these internet video series as an educational tool for our clients and listeners on our website, MidwestMarketSolutions.com. Of course, we try and do these once a month or so. And this month, we are going to focus on the supply and demand report, quarterly stocks numbers, winter wheat seedings, all the information that came out yesterday. And since there's so much information, we're going to put some graphs up and charts and take a look at that. So we're just going to go through this frame by frame here. We've got a few things to look at in the corn, beans, and wheat markets. We'll look at some information and then also talk about what's going on here. Remember that there is a risk of loss in trading futures and options, and everyone must consider whether this is suitable investment for them. Past performance, whether actual or indicated by simulated historical strategies, is not indicative of future results. We do not guarantee information is accurate or complete, and trading advice reflects our good faith judgment at a specific time and can change without notice. Now, there is no guarantee the advice we give will result in profitable trades, and everything is copyright 2016 by Midwest Market Solutions. So let's dive right into it here. As always, if you have any questions, our office numbers there are listed at the top of our letterhead. We have 7 offices around the Midwest. Our home office in Springfield, Missouri, branch offices in Yankton, South Dakota, Storm Lake, Iowa, Thief River Falls, Minnesota, Verona, North Dakota, Alvord, Iowa, and Springfield, Nebraska. Phone numbers are listed there. So if you have any questions with any of those, please contact me and or any of the other associates at the offices. Here's our supply and demand balance sheet for the corn market, and wanted to look at what's over here in the right-hand column, as that's the USDA numbers here. Second from the right is RGO, and we want to thank RGO Brian for providing these charts to us and this information. A couple of key things in here is our total usage is lowered and down slightly from our total production. You notice our total production after the report, 13.6 billion bushel crop, which is one of the largest that we've had in history. It trails the 2014 crop, the fall year of 2014, and it also trails 2013. So we've had 3 years here of the biggest we've ever had in history in the corn market, and this would be the third largest in history behind those 2 years, with the second largest yield of 168.4. So always a question is, can we do that again next year? Well, we're about to find out as the year gets rolling. But one of the things to notice here is down here at the bottom right-hand corner, 1.8 billion bushels of corn carryout. A year ago at this time we were at 1.7, and just a couple years ago we were at 1.2. So we've increased dramatically our ending stocks numbers. In fact, this 1.8 is the largest of this marketing year, and unlike we're going to be able to meet any type of carry that's offered in the corn market based off this huge ending stocks number. And really the only way we're going to shrink this is unlikely we'll get through it with enough usage. We're going to have to reduce the supply of the crop here. You know, we're producing a crop bigger than what we're using at this point. Our total usage is 13.5, and so while that is a large amount of crop to use, once we produce a crop less than that size, then we can cut into this carryout. Otherwise, we're looking at depressed prices here going forward. This carryout is similar to, it's actually bigger than what we saw a year ago, and go back into this 2008, 2009, 2010 timeframe, similar to this type of carryout where we've had back-to-back years of 1.7 or so billion bushel carryouts. These were depressed prices in 08, 09, and into 2010. So to keep that in mind when you're looking at marketing, this price is not likely to advance much based off of this big ending stocks number. Okay, if we look at our corn stocks, this represents our quarterly stocks. What do we actually have in inventory? The ending stocks number is a projection what we're going to have as of the end of the marketing year in September. This is an actual what we have on hand. Farmers' hands, elevator storage right now. It's one of the largest in history. We're at this level, 11.2 billion bushels, near last year's record high amounts, and you can see easily much more than we've had in many times in our history. So again, this is another reason to anticipate that we're not going to be able to rally this corn market much through the winter months until we get some adverse weather into the spring. So for those of you who are storing and hoping that prices are going to improve into the spring time frame, I think you're going to have a weather event to give you a return on that storage investment. And final graph on the corn market that we're going to look at is this corn ending stocks one. This shows what our projected ending stocks are at the end of this marketing year, and we're looking at that 1.8 area, and well above what we've seen in the last 4 years. So this is a change in our mentality, or we need to change our mentality that what we've seen in the last 2 to 3, 4 years, much higher prices, those are not coming back anytime soon, again, unless we get the weather event that we've talked about. This is similar to this stretch of prices in here, 08, 09, 2010, and we certainly don't want to go back to the 05, 06 areas where we had ending stocks over 2 billion bushels, but we're well on our way to working into this type of category again, where we have big ending stocks, and again, trouble may be brewing ahead for the next several months in the corn market. Okay, in the soybeans here, let's look at our balance sheet. Couple things to note here. This production number declined, the largest since 1987 from the November to the final report. So we have an average yield of 48 bushels an acre. As you can see, this is a record yield, and it is down from what we had heard from the government back in November. Our production is 3.93 billion bushels. That's 3 bushels only above last year's numbers. So record large, and does beat last year. And as you can see, we've been in that 3.3 range several times as far as our production, and this one is again similar to the corn, very similar to last year's production, and record large. Exports here were basically unchanged. It made 25 million bushels down from last month. R.G. O'Brien still has exports to drop maybe another 15 million bushels before it's all said and done. That's what they're projecting in this column here. And so they've got ending stocks actually higher than what the USDA does at 440. But we're going to look at a chart on the ending stocks to try and put this in perspective. But you can see, if we go back to the last couple of years, this is a huge amount. In fact, the largest since 06 and 07 marketing year, and could be a real problem for the soybean market and soybean prices as we go forward. Our production was 3.9, our usage is 3.7. So the potential's here that for a year, if we have a reduction in our production, usage will really cut in this ending stocks number, and prices should rapidly improve. But that's to be seen in the 2016 growing season. Another chart to look at is our soybean stocks here. This is on-hand stocks of U.S. soybeans. It is a new record larger than what we had in 06 and 07. Again, because we have so much stocks of soybeans on hand in producers' hands or commercial storage, it limits the upside potential for soybeans. We've been completely sold out of our soybeans as far as our recommendations for our clients, and this is the reason why, is because these huge amounts of soybeans keep us on the sidelines from reownership until a weather event becomes available. And this is our soybean stocks and stocks to use ratio. You can see our ending stocks here at 450 million bushels, in line with what we saw in 05 and 06. Not as burdensome as 06 and 07, but you can see it is over double and almost triple in some years the amounts that we've seen anytime in the last 7 to 8 years. So if you even go back to 13 and 14, we were under 100 million bushels of stocks. Now we're looking at 440 million bushels roughly. So it's a huge increase, and another part of the reason why we have not wanted to be in a reownership strategy at this point for the soybean market. So again, soybean prices expected to struggle along with corn until we get into the spring growing season. That's when we can see some upside potential. We're not going to look at reownership until that time frame based off of these big burdensome numbers and stocks numbers. All right, finally we're into the wheat market here, and we're going to look at the supply and demand fundamentals of of wheat. Total wheat here. Our carryout is 941 million bushels. This is a huge, huge number, largest since '09 and 2010. And it's bearish for a reason, and that is because our exports. If you look at this export column here, 800 million bushels of exports. That is a 45-year low in wheat exports, as we're having a tough time exporting wheat. And there's a lot of competition out there in the world. Average yield this year was 43.6 bushels per acre. We produced a little over 2 billion bushel wheat crop. That's pretty much in line with what we've seen over the last 10, 12 years here in this market. So exports pretty poor, and that gives us a big carryout number here. Now look at this stocks to usage ratio. We're only using about 47% of what we have actually in stocks, and the bigger the number, the more bearish things are. Of course, the tighter the number, tighter things are, and more bullish or upside potential there is for the market. Here's our quarterly stocks number for wheat. A big number. In fact, you can see it's burdensome compared to the last 4 or 5 years. And one market here is our U.S. ending stocks. You can see stocks this year projected to be a huge amount, 940 some million bushels, the largest since the 2009-2010 year, and go back to 98, 99, 15, 16 years ago, and we saw this type of burdensome stocks. So there is one bright spot for the wheat market, and that is winter wheat planted acreage has fallen to a super low level. Back to this, if we go back at one graph here, 2010 was another year that we had huge stocks over 900 million bushels, and that was also a year that we planted a lot less wheat right here in 2010. We're going to do the same thing in 2016. Our acres are down to the lowest level since this 2010 time frame, and there's been very, very few years. You go back to the 70s, to find any other correlative years where we planted this few of wheat acres in the United States, and that is a reflection of the lack of pricing opportunities for the wheat market. And I guess the bad news on this is positive news is smaller wheat acres could give us smaller production and less ending stocks. Bad news is those acres are probably going to mean more corn and more soybean acres in 2016. Should mention as well, U.S. hard red winter wheat stocks are at a 14-year high. Hard red spring stocks, Minneapolis stocks, are at a 24-year high. So some perspective there on those individual stocks. All right, I'm going to sign off here, but again, thank you for your interest, your attention, participation in tonight's meeting. If we can help you in the future, please contact us. List our website there, MidwestMarketSolutions.com. As always, contact myself or any of our offices around the Midwest. Hope you have a great night and have this has benefited you. This has been Brian Hoops from Midwest Market Solutions. We'll be back again very soon.